Good morning all. How's everybody doing this morning? All wide awake, ready to go. If you're in the Telegram group, just be aware there's a scammer in there. Always get scammers in the Telegram group, but I do have a bot in there which keeps on top of him. But yeah, somebody pretending to be me, some kind of investment advice. So yeah, if you get any DMs from me offering to trade for you or do anything, basically, I don't DM anybody at all, ever. People DM me and I respond to them. So if you get any DMs from me, they're false. Yeah. Unless you're being naughty in the Telegram group, then I might DM you. But other than that, ignore. It's not me. So if you do get any anything offering for me to set up $1,000 funded account for you, run a mile. It's not me. Okay, so how's everybody doing? Let me know you can hear me okay. And hopefully you had a good day yesterday. Nasdaq and S&P banked again for us yesterday. Nice moves. Had somebody in the Telegram group as well last Friday telling everybody to sell Nasdaq, it's going to crash, it's going to collapse, everybody, this is the worst thing that's ever going to happen in the world. And it obviously did exactly what I said it was going to do, which was pop below the 72 and then pop back up again. So hopefully you didn't take advice of that person in Telegram. But anyway, so yeah, nice pop. Obviously we had this huge hammer form, which I bought all the way down and got out all the way up. Lovely up day yesterday. So my favorite pattern in the world is the 3-bar reversal. This is, you do not get any more textbook 3-bar reversal than this. 3-bar reversal is either down candle, either a doji or a hammer, and then an up candle. If you get it equal-ish height, that is the perfect setup. Yeah, it doesn't get any better than this. Down candle, huge selling pressure, buyers saying nope, we're going up, and then the buyers saying we are definitely going up. So 3-bar reversal does not get any better than that. H4 daily, pay attention to these time frames and these candlestick patterns, they work beautifully. So lovely movement yesterday on the NAS. S&P, same thing, 3-bar reversal. We've popped up today. There's a lot of selling pressure obviously here where this move started. Hell of a lot of sellers walked into the market. So yeah, it's pushing down at the moment, and with some serious strength over the last week. But obviously the buyers have now stepped in. The 72 is the golden moving average on the S&P, which is where we rejected from. So all looking good. But today we may well get a pullback. We should get a pullback. So I will be scaling in today. Got some limit orders placed. The only reason I've got one placed so close up here is because I got out of a couple of positions on this yesterday. In fact, what I might do, do I want one there? Yeah, I'm going to leave it there. So basically on the S&P and the NAS, I'm looking to scale in at resistance, support, which that should become support. If that doesn't come support, this buy zone will come support. If that doesn't come support, this buy zone will probably come support. And it's exactly the same view on the NAS as well. So I've just taken one off on the NAS. I just put it in the group this morning in Telegram. So just taken that position off from Friday. So I'll quickly go over yesterday first on what happened. So banked banked 1.6% today. Banked 3.4% yesterday. All NAS and S&P again. Yeah, as Peter's just said in the group, a bit slow on the Forex front at the moment. Not banking anything on Forex at the moment. It's just not moving. Nothing's moving. Although we will have a look at the index in a minute. That is moving at the moment. So really good. Really good double bottom bounce on that. So yesterday, all I banked was NAS and S&P positions. So took this one here. Let me just scroll out so we can see what we're doing. If I go down to M30, we can probably see a little bit better, can't we? So obviously banked quite a bit the day before. Yesterday, I just banked the one position on the NAS. I took a break even as well yesterday because I wasn't sure about this consolidation, and obviously as soon as I did, it popped. But yeah, I took that one off there. I've taken that one off on the NAS today. We are rolling over now at double top from last Thursday. So this could be a turning point. That guy in the Telegram might be right. We'll be collapsing. The market might be dropping and the world might be exploding. But as far as I'm concerned, this is going to be a pullback today, probably into this gap. S&P, I banked again that position there yesterday. Did a little bit of drawdown control as well the day before, but I had two positions yesterday which I took on this drop into this gap and took them off at the top. So S&P, I've only got these two little singles left now. And obviously, as you can see, I've got limits in there to try and scale in. So that's basically where I ended up yesterday. 1.68 in the bank so far today. Forex wise, it's just a hideous mess at the minute. Let me just open my VPS 1 second, because I can get my P&L up there then. And you can see easier. So Aussie dollar CAD still holding. Aussie dollar CAD. This area here is the area that I said I'm interested in. When we get down to here as a level of support, I was hoping we were going to get a bounce off the top. So obviously this is where I got initial positioning in, but we are still pushing down. So average is way within one ADR. So, if all we need is one decent day on the Aussie or one bad day on the CAD, I'm out of this lot. But for the moment, we are just still pushing down. This is the buying area here, obviously. So just looking for an area, really, basically to for price to find support and then get the bounce. H4 massively extended. Not worried about this. I've only got two positions on it, and it's hugely extended. At some point, we're going to get the pop. It's got to be a profit take on that move. CAD Swiss. Still holding, still going. Swiss franc just can't get any legs at the minute. When it does get some legs, we're going to see the mother of all candles coming in. So we'll see this sort of move happening. One of them. Basically, it's at the point now where it's getting so unbelievably tired. We just haven't had any bearish price action. If you look at this on the 4 hour, we haven't had a bearish engulfing. For ages. We had a three bar reversal put in here, but this should have been a down candle. Obviously, this was the gap. So yeah, it's just not working at the moment. We are still pushing up into this sell zone, and again, this one I've only got a couple of positions on it. Look at the extension on the 4 hour. It's just unbelievable. The strength, the weakness in the Swiss franc at the moment. So, this is coming down. no two ways about it. This is coming down hard. And when it does, I'll be out. But at the moment, no movement. We're just grinding, just grinding at the moment. And there's no decent propulsion price action going in. Same with the Euro Swiss. Although the Euro Swiss is gone into an accumulation phase, so I would expect to get the profit take move starting on this one shortly, possibly today. I was hoping yesterday Lagarde was going to say something that might kick the market into touch a little bit, but didn't. So again, still waiting for the Swiss franc power on that one. Euro New Zealand, this thing just will not go anywhere. We are stuck in this big consolidation period again, up at the highs. If you look at this one on the daily, keep covering this one every day and doing the same thing, don't we? This control candle is where we popped out and dropped back from. We've never broken below that. At the moment, we are not able to break above it. 4 wicks to the downside. Sellers, 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 sellers. Pushing up today. Wouldn't be surprised if we end up with the same candle we had yesterday. But at some point, it's going to move. Again, waiting on New Zealand strength on that one. Morning, Trevach. Welcome to the stream. It is going to DOB. Don't quite know what you mean by that. Explain if you can. So yeah, Euro New Zealand I'm in, and Pound New Zealand I'm in. Again, Pound, really strong Pound this week. Nice to see, obviously, because I'm in the UK. I'd like the Pound to get stronger. But uncharacteristic. Against the Swiss franc, obviously, it's strong. And against the New Zealand dollar at the moment, it's strong. I've just got the one starter position on this one. So yeah, I'm just really not exposed. I've been exposed somewhere between 0.25% to 2% all week. I just can't get any movement. So waiting for some price action, basically. This long grindy moves are not helping anybody. We need some something to kick in. So that brings me on to news quite nicely. Obviously, the whole week this week, and which is why we're seeing this price action, is it's all US dollar related this week, the news. Just so you know, on Forex Factory, if you use it, they've just introduced this funky little button, which is alerts. So now if you hit that, you got to log in. But if you hit that and log in, it will give you alerts now and push notifications in your browser, which is quite handy. My FX book already does that. But yeah, have a look at that if you haven't spotted it. So yes, this week obviously is all US dollar based. Powell did nothing much yesterday. We had a down move and then it's obviously pushed back up again. But 1:30 this afternoon, we've got CPI. We've got Brainard speaking this afternoon and crude, which probably won't do an awful lot. But CPI can quite often give the market a bit of a kick. We've got PPI tomorrow and then retail on Friday. But that's it. It's all US dollar. So looking at the US dollar, be aware of CAD this afternoon for any positions you've got on, because crude inventories are 330. So looking at US dollar, we're in a really good spot on the Dixie at the moment. If you look at the 4 hour and zoom out a little bit, this area that I drew attention to as support is holding beautifully, and we are getting the starts of a 3-bar reversal forming down here. Not particularly strong down move before the doji, but it's bullish and it's come straight off of this level. So obviously Dixie's in a range, we know that. And what do you do in ranges? Sell the highs and buy the lows. Where are we at the moment? Lows. This is 4 times support, was previous initial resistance. So looks like a really, really good buy zone. So everything US dollar, according to the US dollar index at the moment, is a buy. As I said, US dollar is a buy anyway. So looking at US dollar CAD, really massive extension down there. Excellent place to buy from. Let's just have a look at levels we're on with that at the minute. Not a bad level. It's an area of kind of an area of previous balance where we've been kind of happy to trade around. So it's a nice little support area that. Nice big gap target there as well. So for that one, US dollar CAD, obviously, because it's so extended on the 4 hour, it would be a case of dropping down to M15 and looking for reversal alerts. You've had one already. It's pulled back, put a lovely hammer in at support. This is looking really nice long, actually. Look. So we've had the reversal alert. We pulled back into it, retested. Nice move to the upside. Selling pressure here, got rejected. Pulled back into buying pressure, rejected. Break above there, off we go. Looks like a lovely long on that one, US dollar CAD. But yeah, so that's a really nice looking one at the moment. And US dollar Swiss is a bit of a mess at the minute, but again, we've just pulled back into this selling area and screamed through it, absolutely screamed through it. So that is now well and truly gone. These areas up here is where we're targeting. Market structure is really, really looking good on that one as well. Obviously, the Swiss franc is massively weak at the moment, so bear that in mind. When the Swissy powers up, this is coming down. So bear that in mind as well. And US dollar yen. Yen's been fairly strong and weak. It's just been mediocre, really, the yen. But good area, support rectangle excuse me, holding on the 4 hour. So yeah, potentially good looking longs. So Dixie, looking like it's an area that might power up from. Obviously, you know, you've got some price action forming there, which looks positive. When we get a reversal alert on the 4 hour, that will kind of be a confirmation, I would say, that we're going to be heading back up to these highs. But we need to break. We're not getting a break, are we? It's just since November, we haven't got out of this range. So until the US dollar decides on a direction, assume we're going to be range bound on it. I'd be much more long than short based on the COT report and the futures open interest. So yeah, looks great. All US dollars long. Exposure wise for me, I've got no US dollar at all on at the moment, but I've got 2 CAD shorts, so I can't take that because I'm exposed already. So for those of you who don't know about the dash, this shows my exposure. Kind of ignore these because these are to do with indices, but on Forex pairs, my exposure is here. So whenever I look at entering positions, I have a maximum of 2 position exposure on an individual currency. That way, if that currency pushes hard in the opposite direction, I'm only exposed on 2 positions. So US dollar CAD, to go long US dollar CAD, I'd have to go short on the CAD, which I can't. Swiss franc, to go long US dollar Swiss, I would have to go short on the Swiss franc. I'm already long on it. Yen, I'm not interested in trading at the moment, so I'm just not interested in that one. So for me, the US dollars don't fit into my position, my portfolio at the moment, but all looking good. So that's news. So be aware, 1:30 this afternoon, news on the CAD, and we could well get some decent action on that. Groundhog Day, yeah. Darmon's saying Groundhog Day. Trovac was talking about CAD Swiss. Daily order block on CAD Swiss. Never mind now. Okay. So let's have a look at opportunities for today. ADRs, nothing so far. We haven't had enough movement. So if we look at the price action in Asia, it's not been too bad. Asian session, pretty average Asian session across the board. If you look at the Aussies, nice decent range, but nothing's gone dramatically tonto in Asia. So we're waiting for London, see what London does this morning, see where we're going to break. So no opportunities there. Nothing else has hit the weekly range. Wednesdays and onwards, I tend to kind of ignore average weekly ranges. Obviously, Swiss yen, we looked at this one, hit weekly range. Was it Monday evening or yesterday morning? I can't remember. Monday, wasn't it? Yeah. So it's Monday evening. We hit the average weekly range of the entire week, obviously, for this currency on Monday. And I said, look at this one, obviously, for a long. Massively extended on the 4 hour when we hit the weekly range. And obviously, when we hit range extensions, we tend to pull back or reverse. And that's exactly what it's done. So if you took this one, obviously, you had the alert during Asia, but you wouldn't have taken that. You may have taken it. Well, it depends, obviously, when you were awake. But if you had the EA on, that would have got you in there. So yeah, we've had a 50 pip move on that, so roughly half an ADR so far, but nothing exciting, is it? It's not going particularly far. So that's all for the ADR and weekly extensions. Obviously, monthly extensions. We've got Euro Swiss already. I don't look at the monthlies very much, to be honest, because I'm not trading that slow. So, but Euro Swiss, we've hit the monthly range. Yeah, obviously, we've hit the monthly range. Look at that. So this was 5th of January. So we've had a 190 pip move on a 47 ADR pair. Obviously, in a matter of days. So again, it just, whenever you're taking any position or eyeing up a signal or a strategy, what you do is basically look for confluence. You build a case for taking a trade like a lawyer would. So at the moment, we've got Euro Swiss, huge extension on the 4 hour. We got extended on the 4 hour and we pushed higher, massive push, huge propulsion gap targets to the downside. We're in the 24 to 72 zone, which is a beautiful selling zone when you've got a trend, and we've hit our monthly range within 10 days. Yeah, don't need any more reasons to short. Yeah, reversal alert on any time frame you like, take it and get in. So yeah, Euro Swiss. So that's all on the ADR dashboards. Just so any of you guys that are in here that are in the Telegram group, there's a load of people saying that somebody is contacting them, pretending to be me at the moment. I'm just trying to find who they are. Trouble is, what they'll be doing is contacting them, changing their name or using some spammer. So I can't really block them, unfortunately. But if you do get a message from me, it isn't me. Trying to flog you something. I'll try and deal with that later. Anyway, so ADRs we've covered. RSIs, CAD Swiss, 85. This thing's amazing. Still going. Go back in time and try and find times when the market does this, and see what happens after the market's done it. When we get a push to this extreme, the majority of the time we will get a V-shaped recovery of some description. Yeah, so something will happen like that. Yeah, when you get these massive extensions that are this far down, you will tend to get the V-shaped recoveries rather than the pullbacks. When you get extensions on RSI, what happens a lot of the time, it's a push, and that push can quite often be part of a trend, and all you get is the pullback. When you get extensions this far, most of the time you will tend to see a complete recovery, and more often than not a reversal, as here. Yeah, so this is where that move started and this is where that move ended. Sell and the buy. This is the buy. We were expecting the sell to come through. So basically short it. As you can see, I'm already shorting it. And hold it, this one, as long as you can, because it's highly likely we're going to get a very, very big drop on this. So we don't often get 85 extensions. 80 is when I get really excited. 85 is like, put the mortgage on it type thing. And look at the selling pressure here. Huge selling pressure started this move off. And we're in the selling pressure now. So anybody that entered short from an institutional perspective with huge contract sizing, and they haven't escaped these positions yet because they're trading daily charts. Remember, when you get these big moves, they're not people playing like TPs down here. They're people playing 3-month moves on the daily charts. Yeah. These guys that entered this position here, short, they are going to want this market to go short. They're not out yet at all. So there's going to be a lot of selling pressure coming in shortly, and that's obviously what's going to start that cascade effect. So CAD Swiss looking really good. So drop down to lower time frames, take reversal alerts. Again, somebody was saying in the Telegram group this morning about the market reversal alert indicator. It keeps repainting, and I've covered this to death for 2 years since I launched this indicator. It doesn't repaint. It does redraw, and I guess you could class it as repainting if you want to, if that's what you want to call it, but it draws market structure, right? And market structure changes. Therefore, the indicator has to redraw, because if it doesn't show you the current market structure, it's useless, okay, as an indicator. So you just have to understand what it's doing. So obviously you would have got an alert from the market reversal alert indicator potentially there. You would have got one. Yeah, and that failed. And then you haven't had one since, really. You would have got one there as well. And that failed. But this is where confluence comes into it, yeah? Take the reversal alerts when we are extended, when there's other reasons, when we're at support, resistance, supply, demand, all that sort of stuff, yeah? But CAD Swiss, when you're that extended, Take every reversal alert you get. One of those reversal alerts, when it kicks in, is going to be the start of the market structure break. And when you're extended to this extent on the 4-hour chart, the chances are the candle you get is going to be like that. You will not get another opportunity. You need to get in when that alert happens straight away. And that's what the EA is for. That's why you place the EA on your chart. So the EA just gets you in basically and makes sure that you are in that move and you catch that move when it happens. Because when that big 4-hour propulsion candle goes in like this and it doesn't look back and it just goes, you're going to miss it. Yeah. Let's look at this 3-bar reversal up here. Three-bar reversal, textbook. So we weren't extended right here, but let's say we were, and we're in the situation we're in now. You would have got a reversal alert somewhere around there on M15, somewhere around here. You'd have got a reversal alert. If you didn't take that reversal alert, you never ever would have got an opportunity to get back in this thing. This thing never pulled back, never ever gave you a second opportunity. You missed the whole thing. And there's nothing you can do about it. And this is why I position trade. Because yes, not every alert is going to work. But that's the same as any indicator under the sun. You go and get 100 indicators and put them on your chart. You just don't take every single it gives you. Because it's just not going to work. That's the holy grail. That's what everyone's looking for. And that's what doesn't exist. And if it does exist, somebody point it out to me. Because in 13 years, I haven't found it. But if you do find it, let me know. I'll give you $1 million for it. Because I'll be able to sit on a beach. But yeah, that's where you would have got in on M15. When you're this extended on the 4-hour, high probability is you're going to get something, either a news event or something that the market will use to put in that initial propulsion candle. And a lot of the time, you just won't get that opportunity to get back in again. So, yeah, take it. And as I say, at the moment, M15. We're rolling, but we've rolled multiple days, haven't we? And we haven't actually had that kick in. So for me, there's really good opportunities today. First of all, 3:30 this afternoon, Canadian dollar. We've got oil news, crude oil inventories, and crude oil does affect the CAD. So if we get something that they don't like, their CAD may well drop. Swiss franc. Massive weakness, multiple days on the trot. When the Swissie's weak for multiple days on the trot, you know it's building up for something and it's going to just dump tons of strength into the market at some point. All these positions that go into the Swiss come back out again, usually in equal form. So when you have a multiple weak day with the Swiss franc, you tend to get a massive strong day with the Swiss franc, which follows. And that will be a 200% ADR move. And again, if you can't take it after it's happened because you're chasing the market. So you just got to prepare. But this is why I scale in. Yeah, I'm scaling into this as we get reverse alerts. I won't take this one on because it's too close to this position here. But if we continue to push and this thing just stays embedded on the hourly, and obviously the 4 hourly we are embedded anyway, as soon as that one candle happens, I'm in profit on all my positions instantly. That's what you're waiting for. It's a waiting game. And that's how you play positions. Okay, so that's CAD Swiss. Obviously, just love it. Huge extension. Aussie dollar CAD. Still pushing down. We covered this one this morning when we looked at my positions. This is the area I'm looking for buying pressure to come into. This area down here is where this move started. So this accumulation here has got buyers in it. We know that because that happened. So there's buying pressure here. So if we do manage to get this gap filled without getting some kind of pullback, then obviously anywhere down here we'll be looking for positions to scale in and looking for a double bottom bounce. But this move here, we haven't had a profit taken on this yet. So again, opposite, the inverse happening. CAD news this afternoon. That could be the catalyst. But again, waiting for news. Otherwise, we're just going to grind until we get some. Euro CAD pulling down. I don't like this as much. Obviously, I don't like logging the euro. So I wouldn't want to take that. But it is extended. It's filled in these gaps nicely. The buyers haven't won, though, you can see. Yeah. This is where this buying move started. There. But sellers just went nah, nah, nah. And they are still going nah. So again, get down to here, you get a bounce, but nah, not interested in longing it. Euro Swiss, shorting it, already shorting it. We've looked at this one. Yeah, it's flagging very nicely up there at the moment. So hopefully rollover point. Again, no profit take at all on this entire thing. It's one of the biggest moves, in fact, I've seen on Euro Swiss for quite some time without a profit take. So the market is, everybody that's hit the buy button here is now trigger finger ready to make money. And as soon as they make money, they got to hit the sell button. As soon as they hit the sell button, everyone's going to go now. And this thing's going to come down. So we're just waiting again. Always waiting. This week is a waiting week. It's one of those horrible weeks. Euro Swiss, pound Swiss. Again, same thing. Hugely strong pound. This is Swiss franc. This is all Swiss franc basically. So any kind of weakness on the pound coupled with any kind of strength on the Swissy, boom, profit take move. Again, I'm not in this one because I'm in the Euro Swiss short. But again, massive extension, 80%. Love 80% extensions. 80% extensions just are amazing. And when you get them, kind of, if you can wait for them and just get into your initial positions when we get to 80 and you're patient enough to do that, it's brilliant. You can get in there and just wait for the next reversal alert, hourly, 4 hourly, whatever you want to do, but obviously lower time frame better to getting faster. Easy 200 pip drop on this at some point when the Swiss franc decides to go, but we'll probably play out over a matter of a week or so. But area to get in, and again, we're at a selling gap here. So when you look at this accumulation phase here, with nice accumulation, rejection, and then that is this candle here is where we pushed back down into these lows and finally cracked it. This is the gap that we are targeting now. So initial selling move started here. Just move that off. Initial selling move started here. Yeah. And then was confirmed here. Yeah. So this is where the sellers are sitting. Big move, long period. This is going back to October. So likelihood is a lot of people will be out of these positions. So these might not be strong selling areas. But the buyers obviously are exhausted. So they'll want to do a profit take move on it at some point. Might just be a pullback. So just be aware, obviously, of support areas for a bounce. But if you want to get in short, it's looking good as well. Pound US. US dollar strength. Looks like it, obviously, from the index. We are strengthening up. So pound US dollar, obviously, you would expect is going to come down with US dollar strength. Again, very strong move, but fairly orderly in its movement. So we had these big gaps formed. This one didn't get tested really at all. This one did get tested. This one 100% got tested. So it's been very orderly with market structure. Yeah, highs, lows, highs, lows, highs, lows. It's textbook. But still, there's a lot of buying, and after a lot of buying comes a lot of selling. So I would expect to see some movement to the downside. It's not the strongest extension at the moment, but 70 is good, 75 is better, 80 is better. You know, it's just a gauge. You know, the bigger this is, the more likely that collapse is going to become. So, yeah, looks good for getting into as well. Lovely bearish engulfing going on 4 hour at the moment. Drop down to lower time frames, M15, you will have had a reversal alert and beautiful retest. Yeah, so looking good for shorts. But again, we've got to break out the Asian lows. If you're looking at it on a lower time frame, obviously like M15, need a confirmation of a break to the downside. Loads of targets to the downside. Looks great. Pound US. New Zealand dollar US, and especially like that because of where the Dixie is at the moment. New Zealand dollar US dollar pulled back down into support. New Zealand dollar US dollar. New Zealand dollar CAD. yeah, exhausted. So this one's broken right down. So we got the bounce off the 72.24 nicely. We've made new lows. So confirmation of market structure, obviously high, low, expecting high. So pullbacks into the 24, 72, look for gaps, look for areas to short it. If you want to play this as a long, obviously now is the time. We are very nicely extended. So we should be starting to see that pullback happening. How deep the pullback will be, nobody knows. No one can tell you that. But look for areas we're likely to get to. Okay, so that's a nice support area. That is going to turn into resistance. That is also in conjunction with a gap. By the time it gets there, the 24, the 72 will be down on top of it. So I would target there if you're going to take that one as a long. Looks good. And again, drop down to lower time frame, wait for a reversal alert to jump in. And finally, US dollar CAD. I looked at this one. Beautiful long. Love it. I just got to see the Dixie hold this level. Anything that concerns me, obviously, whenever you look at a range, ranges are great, but the problem with ranges is by the time you've identified a range, it's already happened. Yeah. So to get a range, you need it to bounce 4 times, really, don't you? You need to have 4 points really to form a range. Yeah. And then you can identify that as a range. Problem with ranges is obviously ranges fail and they have breakouts. So when you've had a range which is very, very, very well established and so obvious a child could identify when to go long and short on it, that's the point typically they tend to start to break. We're expecting a break to the upside. And obviously don't forget the other thing that happens with ranges is everybody puts their stops at highs and lows in ranges. Yeah. So therefore the market is always tempted to come and take that liquidity so that it can power its next move up. So we could see more downside today on the Dixie if it's going to be a liquidity run before it pushes, or it could just push. So from the US dollar CAD perspective, obviously being extended down here, this is a beautiful time to start getting into it. It looks like a lovely area to buy from. As I said, this is a fairly decent support resistance, but the thing I don't like about it at the moment is if we do break down from there, it's hard to tell where we're going to go to next. This level here is an obvious level. Yeah. This level here is pretty good. But yeah, so I mean it's the same as usual. You buy, it works. It doesn't work, you buy again. If it doesn't work, you buy again. If you buy down here, by the time you get down to these levels, this thing's down here. What happens when it gets down here? That. Yeah. So it's same principle. Initial position now is good. Technically, it's good from lots of standpoints, but there's your support levels below for additional positions, and they're not far away, I don't think. So less than an ADR, just over an ADR. So literally you're probably getting maybe 3 positions there before you get the bounce back up to here, if it doesn't happen straight away. Okay, so that's those. Hourlies, anybody interested? CAD Swiss is the only thing you've got at the moment. Just love this thing. Massive extension embedded. Yeah, short. I'm short. I'm already short. Just short it. Wait, it's coming down. Swiss franc. We're just waiting for the Swissy. So we'll see. Okay, so let me just have a look at your comments. Certain shorts. Yeah, they do. It's just a. Diamond, yeah, he was just upset to learn he did not buy magic beans. Yeah, you're talking about the guy in Telegram. Yeah, I mean it's the problem with trading, and it's a fundamental issue. It's never going to go away as long as people on Instagram and all these channels are sitting in front of Ferraris going, I just made this indicator and it makes 99% accuracy and I've just turned 1,000 into 1 million. Yeah, brilliant. Now go and send that Lambo back that you were sitting on because you've only rented it and you're working out of a bedroom. He's selling the indicator that is the magic beans, and that's what everybody's looking for. And it's, you know, it's the Holy Grail. I've got a video on YouTube about it, Holy Grail video. So go and watch it. It's fun. My Holy Grail video. I like my Holy Grail video. Can't find it now. It's on here somewhere. Got to go back a bit now. There it is. There's the Holy Grail. Look. There's the Holy Grail. Go and watch that one. It's an old video, but it's a good one. Yeah, it's just unfortunate. The way the industry is set up is to promise the earth and deliver peanuts. Unfortunately, that's not the way it works. Pound odd looks like a potential trade a couple of days back, but it's ranging. So we got into a consolidation. Hourly, we've got a reversal alert and just basic accumulation phase at this high. So we are accumulating up here. I don't like accumulations when we get to things like this. I like a double top or nothing really. This could go either way from here. The problem we have at the moment, or that I have at the moment, because I like to use COT, is we've got no directional bias on anything. So it always becomes a little bit more difficult when you've got nothing in the higher level telling you this is what we're doing. Everybody's shorting everything against the US dollar. So it's really difficult to know. You've got to rely on the strength of the pound against the Aussie, and it's difficult. I think the way with what's going on at the moment, obviously, if you're in the UK, you know what's going on with Boris at the moment. With all these parties that are being announced. Today, he's got to stand up in Prime Minister's questions and answer to his own party and everybody else as to why he's been covering it up. And I just get the feeling it's the end of Boris. If Boris doesn't go, which is quite likely, I think it's the end of the Tories, because Labour are just... If Boris stays in, Labour would love it, wouldn't they? Because all that is going to happen is you've got somebody going for re-election that the entire country hates, and even most of his backbenchers in his own party can't stand him anymore because of the lies and the cover-ups. And I think if there is real instability in government, that could be really bad for the pound, and we could see a collapse on the pound. So to cut a long story short, I think there's uncertainty at the moment. We've had a strong pound, uncharacteristically, but it's at a good level, I think, pound odd specifically at the moment. If you look at where we're bouncing, or where we're not bouncing, but where we're accumulating, is more than likely a resistance level. So, we've tried to get here before and rejected. Yeah, we tried really hard, but the market was not interested. Again, market was not interested. Again, market was not interested. This level, this 190, which is what this is. So if I just draw another line on there and stick it at 190. That level there really is what we're discussing. The market doesn't want to take it above 190. So at present, this looks like a lovely potential short area. But market structure at the moment is obviously highs. So worst case scenario, I think on this one, we're due a 24 bounce if we're going to continue the trend. But we could push up to there. And if so, obviously you would scale and escape when you get there. So I like it as a short. But, you've got a bit of uncertainty in the market at the moment with the pound. So it's difficult to tell what's going to happen with it. Pound Swiss had a reversal alarm. What? Yeah, probably. What time frame? M15. Yeah. So M15, you're out of reversal alert and retest. Okay. So the retest is confirmation of your M pattern reversal. Be aware of this. Yeah. Big buying pressure came during Asia. It's been multiple times rejected. So I would say the safest trade here, when you break that, we're off. And then you've got to challenge the Asian. Then you've got to challenge the lows of London yesterday. And then down. Yeah. So always be looking, whenever you get an alert on anything, first thing I always do is where are we going, right? If this is right, what's going to happen? Where are we going to go? Either there or there. Because this is just, there's nothing. There's no support or resistance there. There is potential support there. There is potential support there. There is potential support there with that gap. Yeah. So if I was going to take that short now, I would be saying to myself, I want to watch it when it gets there. I want to watch it when it gets there. I want to watch it when it gets here because there's buyers here. If it cracks that, I'm not going to touch it until we get down there. 150 ADR to the downside. And then look on the higher time frames. Yeah. Does that make sense? Yeah. Makes sense. Coming down to here. If that works. So be looking for somewhere around the 90 pip move. 1 ADR. Look left. Always look left, as Darmonds just say. Drop up to H4. Does it still make sense to go short? What else could we maybe careful of? Yeah. So want to be watching around the 125, 400 level. Potentially as well. Yeah. Look at where we're getting in on a higher time frame. Does it make sense to get in now on that reversal alert? Of course it does. Yeah. Looks brilliant. Building a case. That's what you're always doing. You're building a case for a trade. Look at where we are. Look at levels. The market moves from support and resistance zone to support and resistance zone. That is either a horizontal line, an area you draw on your chart, a gap, propulsion gap that is likely to be defended. Have we got confluence of our market condition indicator? The RSI is telling us, yes, the market is exhausted. It's had a big, strong push. It's due for a profit take. Have we had a profit take move recently? No, this thing's gone skyward and not moved anywhere down. It's due. Confluence. And finally, if you're going to be a position trader and you're not going to use a stop, if I'm going to get into this, what if it goes wrong? Plan for all eventualities. So I'm going to get in here. If it hits my target, I'm going to get out. I'm going to walk away. I'm going to move on to the next opportunity. If it pushes up and it doesn't work out for me, where's this going? Scale out. Where are we going if I'm wrong? Yeah. Okay. Support resistance. This is a lovely support resistance area. So this is why we're taking this trade at the moment, because we're here and we're in this gap. If this pushes up above here, where is it going to potentially stall and reverse or pull back from next? Here. Yeah. So potentially you could take another trade at ADR. So get in here, take a second position at ADR. Yeah. If it doesn't do that and it pushes higher, where else are we going to go? Somewhere up here, aren't we? So potentially we could double top that. Potentially we could double top that. So plan for positions up there. Watch what happens when we get there. Get in when you get the next reverse alert up at that level. Yeah. Eventually, if we do get up to there, because this trade hasn't worked, this RSI is going to be massively strongly embedded. And every time we get an embedded RSI, we get a collapse. Yeah. You're waiting. If you want to do it with stops, get in, take a stop, get stopped out, wait for the next one. Reversal alert there, get stopped out, wait for the next one. Reversal alert there, get stopped out, use a risk reward that pays for those two. Done. No right, no wrong. Everybody trades in a different way. But that is how I view the market. The market, we know for a fact, moves from support to resistance, supply to demand. And when it's had long runs of extended buying or selling in one direction, it either pulls back or it reverses. We know that because we can do what? Look left. That's what happens over and over and over again. That is how the market works. Yeah. It's just what it does. And all we need to do is look at these areas and wait for a signal. And my signal is the market reverse alert indicator. You could use a bullish engulfing, bearish engulfing, shooting star, hammer, tiny moving average crossover. Use what you like. Doesn't matter. But it's all the same stuff. It's market structure. And that's what you need to pay attention to, is where are we going? Yeah. If market structure is going to continue like that, where is it going? If it's going to go down like that, where's it going? So if you get into a short trade, market structure is going to tell you where to get out. If you get into a short trade and it doesn't work, market structure is going to tell you where to get in next. If you get into a long trade, like here, for example, market structure is going to tell you where to pay attention to potentially get out. Yeah. And if you get into a long trade here and it doesn't work, market structure is going to tell you where to potentially get in again. Obviously, if you got in long there, you got a long way to look back. But and again, you know, if you can't see anything on your chart on H4, you have no choice. You go higher. Yeah, and that's basically the way you do it. It's very simple. Yeah, just got to be patient, and you know, pick your fights. Okay, so that's all for today on those RSIs, etc., etc. Have a quick look at the S&P and NAS before we disappear. If anybody's got any questions, think of them, stick them in the chat now. 'Cause I'm just wrapping up on this kind of recap, basically. So, obviously S&P. I've been scaling in for the last 2 days. Well, for the last 4 days, really, and taking profits on all the pushes. We've got this beautiful 3-bar reversal, as I said at the start of the stream, just gone in. We, at the moment, sticking the doji in. London's just pulled back slightly and pushing back up into midline. So today, we may well get a down day. We'll see. We've only had one up day. I mean, to be honest, actually, we've had 2 up days. I class this as an up day. When I see a hammer like this, even if it's bearish as a candlestick, that is an up day. Yeah, definitely an up day. The market is up. It pushed down, but it ended up, big style up. So that's an up day. That's an up day. Obviously, you know, when we start our runs on the S&P, you get the odd down day. So for me now, I am going into assumption mode that we're having an up day. So I'm going to buy every pullback. So lower time frames, M5, M15. I'll be looking for reversal alerts to get into the market, which I've got the EA running for me to get me in automatically if I'm not paying attention. I've also got pending orders set at specific target levels that I like the look of. So for me, this propulsion gap here, why is that drawn there? Should be down there, shouldn't it? Anyway, but anyway, this gap from yesterday, when we started this big push yesterday, as you see, I was scaling in on the pullbacks there as well. If we can pull back down to here today in London, I will get in with an additional position. And on 4 hour, I've got a buy limit here as well. So if we're doing a deep pullback on this candle, this big bullish engulfing, I'll get into a couple of additionals. But for me, S&P has fulfilled its norm, which is the 72 pullback, and then we get the rally. So looking for up days, basically. So buy every pullback on that. NASDAQ, same story. NASDAQ's gone way, way, way deeper than anticipated. As I said, we do occasionally get these big ones on the NAS, but for me, again, potentially we could see a pullback on the NAS. We've had a reversal alert, but we could still see a pullback on the NAS. It's a bit concerning. The NAS has gone a little bit out of sync with the S&P, which is not the norm. What we tend to see is the NAS pushing ahead of the S&P, but market structure staying very similar. The NAS at the moment is actually putting in more bearish than bullish market structure. But this is a very big, when you see this gap here, we just basically tap straight into it and bounced. So it looks massively bullish, but I think we may well be due another pullback on this as well. So both of them today, potentially pullback and runs. But equally, we could just go straight out of here. So, but if you're looking to get into these, obviously London session, we don't tend to get massive movement on the NAS and the S&P. We have had a couple of days where we've had some decent movement, but typically it's a wider than Asia accumulation phase is what we tend to see. So yeah, but it's pushing at the moment. We've just cracked back inside the Asian range on the NAS. So I just had a reversal alert and retest long. But I think, if we're going to pull back, it's sort of an ADR pullback or 3/4 of an ADR pullback before we go. So, but we'll see. We'll see this afternoon. I will be back on at 2 o'clock this afternoon. Obviously, and we'll trade the New York Open. Pound yen. Diamond. Let's have a look at the pound yen. It's difficult, the pound yen. All yen pairs at the moment are tricky because the yen I'm expecting to power up along with the US dollar at some point, but you can see all of they all have a very similar characteristic pattern, and this pattern is all formed by the yen. So as with the US dollar, the Swiss franc and the yen, those three currencies are the controlling currencies. So whenever one of those three powers up to any extent or weakens to an extent, that will drive the other currency. Yeah. So when the yen powers up, everything against the yen without question will go down. Swiss franc, when the Swiss franc powers up or weakens, as we've seen with the Swissy this week, when the Swiss franc weakens, everything pushes against the Swissy. And it's the same with the US dollar. So with the pound yen, obviously with the pound having such a nice strong move, the pound yen obviously has had a decent movement because we've had a weak yen. But when the yen powers up, obviously that will go down. Now all of these at the moment are in a big daily accumulation because all we've seen with the yen is money flowing in and out. Because it's a safe haven, risk on, risk off related currency, when there's risk on in the market, it will go one direction. When there's risk off in the market, it goes the other direction. So at the moment, I would say probably more looking shorts than longs, but that goes against my bias of long on it based on the US dollar expecting to be strengthening. So this is why I'm staying clear of the yen, and I've got no exposure on it at the moment because, as you can probably tell by what I'm saying, I'm unsure. As they say in Billions, I only get into stuff if I am not uncertain. I'm not certain at all on this as to directional bias. But I would be, at the moment with the pound, I would be more short than long. Not really helpful, am I, on that one? Because I don't really know. But again, look at support and resistance. I basically wouldn't play anything unless I've got an extension. So if have you got into this short already? Is that why you're asking about it? And if so, where is your average? I'm waiting for the delay. It's horrible, the delay on stream, isn't it? It's not like Zoom. Zoom's instant when we were doing Zoom. But you get this... it's like talking to someone in America and you have to talk over them all the time, don't you? I'll assume you're going to answer that in a minute. So yeah, I mean, if you're already short, obviously... We've had a reversal alert, so we have had new market structure form. You've double topped. You're putting in a bearish engulfing. Yes, I'm sure average is miles away. Right, okay. So, yeah, from a market structure perspective, obviously, we've had the market structure break. We've had the reversal alert. So we've had strong bearish movement. That has retested. Lower high, lower low. Double top, bearish engulfing. Yeah, so if you need to 155,621, you're not bad. It's not bad, is it? It's 1.5 ADR. So you're roughly, 1.5 ADR. If this market structure is going to hold, and this double top is going to hold, we're going to put in a new low. The new low, obvious spot for the new low to bounce would be there, which is roughly where your average is. So if I was you, I would be getting into slightly larger position sizing just to bring your average up and try and get your average to around about 100% ADR in line with these lows. So if you can get your average in line with these lows, so this area here, that way, what you're going to do is, if we are going to go into a range and accumulate here for another push, i.e. wait for the 24 to catch price and then propel it, you've got your out. But equally, if it cracks that level, we're likely to do that, aren't we? So, difficult one, the yen at the moment. It is a very difficult one to trade. But looking on the hourly, I mean, you've got an obvious stop. If you're going to get in aggressive, take an aggressive position on the hourly reversal alert with a stop above it. You're only looking at something like 40 pips, which isn't a lot. You've got a high up there as well. Bear in mind, obviously, with accumulations, the final move of an accumulation, or just before it starts, is quite often a liquidity run. So anybody that is trading market structure, which there's a lot of people these days, obviously, will have seen that liquidity run and new low. So they've seen a market structure break there. Yeah. So they would have gotten short here, and their stop will be there. Market would typically, not always, but typically take that and then start their move. Obviously, if any of you guys are familiar with wick-off, that would be the wick-off spring. And then we would move down, make a new low, accumulate at the low, and drop. But again, everything, when you do an analysis of any pair, any instrument, any chart, using any strategy, system, or indicator, it's a what-if scenario. Nobody in the world can tell you the direction of this thing. Nobody knows where it's going to go. You can only plan for eventualities. So if you're in a position where you need to get down to here, your average isn't where you want it to be, you have to get in with aggressive lot sizing to make sure that you can get out of that position. And that's all you can really do. Or hold on and assume that after this amount of time we are going to come down. But difficult. Yens are nasty. A lot of people don't trade the yen, and to be honest, whenever I've done back testing with the EA, I've always, with not just with my EA, but with a lot of EAs and strategies and systems, they always fall down more on the yen pairs than they do anything else. Because the yen, when the yen goes, it really goes. Because when there's any catastrophic disaster, money just piles in or out, either way. And you tend to get these big, strong squeezes on the yen. And the yen, when it squeezes hard. So, there is a case for saying scrap the yen, don't bother trading it. If you take it out of your arsenal, you will be squeezed a lot less. But it's a very tempting instrument because it gives really nice price action and really nice trends. So if you can get into a trend and ride it, it's lovely. It's a great trending instrument when it goes. Yeah, but I mean, look at the trend strength. From from an RSI point of view, you wouldn't have got in until the accumulation phase there. But this thing got crazy extended, and this is what I was saying earlier. If you can wait for the 80 level extensions, you still would have got in there, but you would have only had to sit through that rather than having to sit through that as well before you got the sell. Yeah, everybody that hit the buy button there has got to hit the sell button, and that's why that happened. Everybody that's hit the buy button here has got to hit the sell button, and that will happen. But it's hard when you get into a squeeze, isn't it? But the longer you wait, the less positions you'll get in, the less drawdown you'll be in, the more comfortable you'll be. Yeah. Something I should have really covered in the Bootcamp, I guess, is if you're just starting out position trading and you want to use the RSI as your market condition indicator, as I do, don't start with 68 and 70 and the typical levels that most people start with. Start with 80 or 85. Yeah, you won't get into many positions, will you, if you start with 85? But the positions you do get into will play out massively quickly. That's exactly what happened to the market extension, the extension high before Christmas. Yeah, and you were obviously in the room when I said it, and this is why I stopped trading before Christmas, because of the liquidity. Yeah, and you've learnt now why I didn't trade before Christmas. Light liquidity coupled with individual currency strength equals whoops. That's what happens basically when you have light liquidity coupled with an instrument that powers up or weakens. You just get the slippage, and that slippage is quite often hideous. And as I said before Christmas, the reason I don't trade before Christmas is because I've been stung at that period of time many times. Not last Christmas, but the Christmas before, it was US dollar Swiss. I got stuck on US dollar Swiss, and it just slipped and slipped and slipped for 2 weeks and the run up to Christmas, and then it all unraveled in January. But actually, it unraveled just before Christmas. But that's why I don't do Christmas trading. Take some time off. You work hard enough in the year, and these periods. I mean, these can happen at any time. Obviously, this isn't Christmas. This one here, this is October. It can happen any time, but Christmas it happens a lot more. Christmas present. So when Christmas present, your Christmas present is always the Santa rally. This was my Christmas present this year from Santa. He pulled it back into the 72 for me and let me ride that thing, and I made 48%, didn't I, last month? Thank you, Santa. Santa rally. Yeah, exactly. I know, but it's a valuable lesson. Yeah, as long as you learn from it, it's good. If you lose money and you learn and don't do it again, that is a positive. Yeah, I've blown many accounts. Everybody blows accounts. Yeah, you blow accounts. You get into hideous positions. You just get it wrong. You revenge trade. As long as you learn from it and write down, I will not do this again. Years and years ago, I used to have post-it notes all the way down the sides of my monitor. And in fact, I also used to use this indicator. Yeah, let me just take the spread off because I don't need that. I used to use this indicator. Oh, not that one. I used to use this indicator here and say, I had this on my chart for ages. Because every time I made a mistake and I was like, I've done that. That's the third time I've done that. I'm not going to do it next time. What I would do is I would open up that indicator and I would type that mistake in there and I would stop making that mistake. And eventually I would then make another mistake. And then I'd go, oh, you keep doing that, you idiot. Stop doing it. And I would type it up there. And every time I looked at my chart, it would say, don't do this. And every time I was going to hit the button and do it, I would look at it and go, ha, I shouldn't be doing that. And it is as simple as that. And I had post-it notes all the way down the sides of my monitor on both sides that told me what not to do. Never told me what to do, told me what not to do. And that is how you make money trading, is you eliminate your mistakes. If you have a system that has a 50% strike rate and the 50% of losers, if you can eliminate 10% of those, you've now got a 60% strike rate. And if you've got a 1-to-1 risk-reward ratio, you just made yourself a profitable trader. Yeah. So it's not about finding ways to make money, finding ways to get better entries, finding ways to get better exits. It's about eliminating the loss. And if you can eliminate the loss by stopping yourself making the mistakes you make over and over again, that is how you will make money. So in December the 1st next year, in your calendar, Outlook, Gmail, whatever you're using, put a note to pop up and say, do not trade 2 weeks before Christmas. And then come into your chart and go into the symbol and time frame on chart and put stop trading 2nd week of December. Yeah. And you do that on the 1st of December, and then you'll be looking at that every single day when you open your chart and you go, need to stop trading. And you won't make that mistake again. Yeah. Just a little tip. That's what it's about in trading, picking up tips. Tips and tips and tips. The more tips you pick up, the more you stop making mistakes, and the more you learn, the quicker you get to break even. The quicker you get to break even, the quicker you get to consistency. The quicker you get to consistency, the quicker you can jack your job in. That's what it's all about. But anyway, there you go. Lesson for the day. But it's a valuable one. Don't short S&P. Yeah, if you're a scalp trader, type that on your chart, and I'll instantly convert you from a non-profitable index trader to a profitable index trader. Because if you just don't do that one thing, you'll immediately become profitable. There you go, another tip. It's pretty obvious, isn't it? Don't short S&P. Right. I'll leave it there for today. If you've got anything else you need, let me know. Stick it in the Telegram group. I'm in there all the time. Come in the Telegram group if you're not in there already and you're watching for the first time. If you like the stream, give me a thumbs up. It'd be great. And I'll be back on at 2 o'clock. See what happens today. S&P looks like we may well be having an accumulation push day, which will be absolutely beautiful. So I'm going to hold my S&P and NAS as long as I can. I've not gotten much on the S&P, but the NAS I have. Still got a couple of small ones on as well. But I've got a buy stop, obviously, as well placed. I say obviously. I have got a buy stop placed as well. If we do get a run today up to ADR, I'm entering another position. Yeah, I'll be back at 2 o'clock. We'll do a little analysis of what's happened during the London session and get ready for New York. Be aware of news today, obviously, as well. 1:30, we've got CPI. So watch your US dollar positions. In fact, watch all positions around 1:30. Once CPI is over, we might see some market movement starting to happen, which is going to be towards the start of New York. So, okay, guys. So if you need anything, come into the Telegram group. Let me know. If I message you in Telegram, ignore me. It isn't me. I'm not trying to get $1,000 out of you to set up an account. But other than that, I will see you this afternoon at 2 o'clock.